And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Sunday, July 25th, 2021. I am going to begin with our monthly chart because I would just want to kind of put into perspective the top that we're reaching and what is lying directly pretty much in front of us. And so I kind of want to lay out some of the basics of that. I will get into, the much more closer detail, but you can tell that's all the way up here and you can barely even see it because of all the little clutter that's in there with it. So I'm up on a cycle level. And this is the NASDAQ. So I'm up on the cycle level and I'm within the finishing stages of a cycle third wave. So quick breakdown. Cycle degree will have 5 waves of primary degree. Primary degree will have 5 waves of intermediate degree. Intermediate degree will have 5 waves of minor degree, and minor degree will have 5 waves of minute. So back out, finishing a cycle level wave 3. That suggests or indicates that we are completing 5 waves of primary degree, 5 waves of intermediate degree, 5 waves of minor degree, 5 waves of minute degree, subwaves of subminute degree, etc., etc. We have gotten very granular up here at the top. So the cycle wave 1 took 5 years. So 5 years duration. Cycle wave 2, very quick correction, was about a year to a year and a half in that area. So that puts cycle wave 3 in the area of 12 to 13 years. 12 to 13 years. So you have to put that in to our heads and to realize just on a Fibonacci time scale, we're likely looking at 1.5 to 2.5 years of a corrective cycle. And how that cycle then will take form, we can get an idea simply using the rule of alternation. And in the rule of alternation, no matter what degree, okay, so remember, we're trying to formulate what this could look like on a cycle level. Well, this is considered a sharp correction, a zigzag. And the wave, so the rule of alternation would suggest that the wave 4 will be a flat or complex flat. So in other words, the highs and the lows of all these different moves in this correction will be approximately of the same length, and it'll be like one big box. A triangle could form within it. There's 13 different formations that it could then create as it's rolling out an A, a B, and a C. So we still have that ABC, but it was what combination of those subdivisions of the wave A's, of the wave B's, and the wave C's will this take? That we allow the market to tell us, but we need to kind of take a look at to realize that we're likely going to be in a period of more range bound, but that range could be 2, 3, 4, 5,000 points. That's the underlying fact. We still are going to have big moves, but that's just going to be flat. And what we're sitting in between is one bull market finishing, then having its bear market, which is going to end up not being so much price destructive as it would be in time destructive, because it's going to take a lot longer to get the whole thing done. So we're into a cycle wave 4 that will likely form a big flat correction over time. Plenty of good trade, but we're sitting between bull market advances. So if this is finishing cycle 3, we have a cycle 4, we still have a cycle wave 5 up. That's bull. Or it's a bullish move. Sorry, it's not bull, it's a bullish move. And back to my point. So this correction is going to be extremely tradable, but depending on how you trade, for day traders, it's going to be great no matter what. But the expectation is going to remain in place, whether this market finishes at 15,200, 300, 400, or early up to 15,000, or excuse me, 16,000. It's not going to make any difference. That correction is going to bring the market most likely back into this area. Why? Because Elliott noticed, and you also can now just do this for yourself, that the corrective phase we're looking for will most often return to the price territory of the fourth wave of one lesser degree. Cycle wave, one lesser degree is primary, and here is primary 4. It is right in March of 2020, which was that big boom from the first time that coronavirus came to keep us company. And so what we're just doing off of that is just the finishing waves. So the corrective wave is, or corrective wave sequences are staring us right in the face. So again, it's not going to matter where this thing ends up, whether it finishes even right here, like Friday's highs, that was it. I doubt it, but it could. If I start to bring this down, I wanted to start actually in the daily, actually, yeah, a little bit more. You can see we have 1 and 2 of intermediate degree for this primary degree, fifth wave up. So we've got 1, 2, 3, 4. So we're in the last fifth wave, intermediate wave 5, to complete the primary wave 5. Now we'll finish. What are we doing within that? We've got minor. So we've got 5 waves of minor degree. Got minor 1, 2, 3, 4. And that's on my daily. Now I'm going to go down to my hourly. 3, 4. Where are we now within this minor wave 5? Finishing advance. Minute 1, minute 2. So we're just, and I think when I spoke and gave the last update last Thursday, I was talking about that minute 3 could be finished right in here. We're looking for a minute fourth wave correction. Look for it to come back into, I think we're looking even down here. Market made it very clear on Friday what the story was and where this third wave is likely finishing. It may still not be done. And I want to tell you, this rally, and this is always what I have meant when I'm talking about, we start getting into uncharted waters. Do you want to sell? You know, if you're more of a position trader, do you want to sell here? Or what can you hedge it against? Or how far should it be going if I'm going to start shorting it here? We don't know because there are no chart points to base it on. So the market's going to get very thin if you come look, if whoever's coming in on the buy side is coming looking for size. They need to buy it because of what's ever happening in an underlying stock, which is within the index. So, you know, you've got all kinds of players coming in because they got to hedge something, and sellers are like, really? No, good luck. Because if everybody wants to buy, nobody wants to sell. So that just makes the liquidity dry up, of course. And so the liquidity that's coming in is just going to chase price. It's going to chase where the orders are, where they can get filled. And so as we see this progress now, pullbacks likely will remain shallow if we are still seeing that buy pressure present in the market. So what could happen from here? We could start to get some pretty strong, but again, this would be my first level where I think we should possibly finish this minute third wave. And because that would be the most likely, right? Because I think I ran Fibonacci's for within the sub level to figure out where this sub 5 was going to finish this minute level 3. And that was it. So the most common relationship is 15,156. And I'm like, wow, that's pretty high. But guess what? We have additional resistance above, and then we have an overlap at this 0.382 level, which is where minor 5 would be 0.382 of wave 3. There, you know, these are areas where it could, and since I've got overlap there, what's to say? Look at what they did on Friday, that they can't do this tomorrow. And then we correct. And I would expect this is the other thing, with the higher we get, I'm looking for that first leg down, be like whack, we're going down and everybody's just turning. If you were forced to buy it, you're going to want to go find in the first seller. Lots of things. So the trading, I think, should still be good, but be careful on trying to pick a top. Again, let the market tell you, and often you're going to give up a lot of this upside because you're going to be looking at your moving averages against your 1, 2, and 5 to figure out when this thing's going to turn and give you some money before it reverses again in a thin market. And instead of you earning $500, you're giving 1,000 because it's going to move so fast. So be careful in trading and trying to pick a top when you know that your moving averages up to this point have been telling you this should continue. And I'm talking about your 5 minutes still telling you that it could continue. So you might be getting a little sell. So your 1 minute, your 2 minute is saying, yeah, okay, we might drop a few dollars here. So it's scalpable, but the trend remains in one direction. So you don't want to majorly get short. So the other thing is that you're going to be quick on your feet. If you do get short and they're not done and they come whipping right back in. So little trading points, sorry. So, but I feel that we should get a correction. And then that's just going to be a minute 4. And I'll definitely be looking at to come back into this little wave 4. But the higher it gets, the less chances we get, because it could be, again, a kind of a sideways correction, like I've just talked about on that cycle degree. It can happen on a little subminute degree too. And that would just say we should just hang out at these higher levels until the next bit of news, the next earnings report, whatever is going to be happening happens. And that could again start driving the market higher, because it really did. The market somehow loves the 618 levels. So 1.618, 2.618, et cetera, et cetera. And so this would be the next 618 level up. And that's at 15,512. Could a wave 3 do it? Absolutely. Not only is it a minute 3, it is a 3 of 3. Because if anything, I believe I did do that already. If anything, I might have to move the 3 up, this 3 up. And I did. That's where it is. I did already move it, but I may have to move it again. And that would put this 3 of 3 move absolutely typical, but we're in no man's land doing what is very typical in this type of a wave, a third wave. And that kind of catches me off guard sometimes a little bit. It's like, we're finding buyers up here, but we have to remember that's electronic wars and et cetera, et cetera. Anyway, yes, I may have to move this 3 because this is a finishing subminute wave 5. So that's actually to here, but it could sneak its way up into here. If it really flew all the way up to here and it's still going to be a third, which, hey, you never know, that would just suggest that this little sub wave 3 extended, and then the sub wave 5 also extended. So it's, and Elliott always noted this as it's an extension upon an extension. So instead of just being a normal 5, we had an extension, then we get a correction, and we have another extension upon the extension, because it's still within that larger, it's still within that minute third wave. So everything remains on the table and carries a good probability of occurring. So we have that, and then we start to cluster again way up here. But you can run numbers that are going to take you in terms of the minor 5th wave, 15,700. Is that a reality? Well, look what they did at 15,000 and 15,100. Sorry, did these numbers exist? Boom, they went right through them. Not as far, of course. It got above 15,100. It got up to 15,017, and that took 2 tries. But yeah, tomorrow, this is where we're trading right now, 15,104. We're not even that far away. So this spring could be already pressured and primed to fly And we also still have Asian markets and we have European markets to kind of tune in. So we do have these upper levels. Would I expect it to go all the way to 15,700? Yes, eventually, but not right now. I do believe that we're likely needing to pull down. Again, shallow, so I can come down into this one, into the 30-minute, and you're looking at where this is pretty shallow. But maybe back down to there, which is what? All of 15,082. Ooh, wow, hurt me. 15,072. That would be a pretty logical point for it to come to. So you get up here, then you get an A, a B, and a C, you come down here, and then we're off to the races again to finish this wave. And for all I can determine on the 30-minute chart, it's 1 and a 2, and away we go. So we still have all this potential. And remember, uncharted waters, do you want to sell when they're coming for large numbers? No, you could get killed. You could get absolutely wiped out trying to sell. So we need to be very careful. We must follow the trend, or you're going to have to be willing to go bury the hatchet when you're down 1,000. Whatever your choice is, just be aware. It doesn't mean, what it means at that moment that the market, yes, is very bullish. There are more buyers and sellers, and they're going to go find their sellers no matter where they have to go, because they're coming in with market orders. And we do too at times, but we're not hedging anything. We have nothing. We're just straight selling short or buying long. So if it doesn't go our way, we lose money immediately. Case in point. All right, this is going on much longer than I wanted, but then again, that's what Sundays are all about. So I still think we have upside. I still think we will get at least to there, if not 15,200. Before we get that correction. So before we get a little bit larger of a correction in a minute wave 4, I think we're probably going to be doing it off of these levels, maybe even higher. But no matter what, wherever we reach that high, we still need that 4th wave. And we're still going to have a 5th wave up to additional highs, and then we still need another 4th wave. So we still got a ways to go. And each one of them can subdivide. So hopefully it'll be, I think if we keep in mind when you're trading, if you can just go out and get your 30-minute picture and your hourly picture, and you can kind of base the move on what you're already witnessing. So if you know that the underlying current is just continuing to tell us higher, moving averages are either flat or just still pointing up, you want to get in, but you then need to just really weigh your downside risk. And you have to put a stop in. And then wait. So if you're going to buy it and all your charts and everything is pointing higher, I could buy it and then put it at a point where, well, if it goes below that point, it's not going there right now. And that's all you're willing to risk. That could be, so more like a swing trade. And that could be very possible for tomorrow as well. Let's just see what's going on. So if it's really kind of crazy, no, but if it's not, okay. Anyway, tomorrow, I think we're going to need a correction, but we're still going to see some rally. We need to finish this 3rd wave. And once we do, and that would be the minute 3, when we finish that wave, we're going to get a minute 4th wave, and then we're still going to get a minute 5th wave rally. And that, my friends, will finish the ball game. But we have to allow each one to. So we're just finishing the sub-minute 5 here, but this sub-minute 5 is also subdividing. So we might get a little thing that comes back to like 72, and then we reach up, and that's within the sub-minute 5th wave. The power of the rally. So we're all the way down to a very detailed level. And I want to be there because I want to play it out, and I'm a day trader. So that's why I go that deep. All right, I got to leave it there. Otherwise, we'll be talking all night. Have a great trading day tomorrow. And the next update will be Monday, the 26th.